Investing can seem intimidating, but it doesn't have to be. Let's dive into the basics of investing for beginners. First, what is investing? At its core, investing is about putting your money into financial assets, like stocks, bonds, or real estate, hoping they will grow over time and earn you a return. The key idea is to make your money work for you, increasing your wealth over the long term. Now let's talk about some common investment options. Stocks represent shares of ownership in a company. When you buy stocks, you are essentially buying a small piece of the company and betting on its future growth. Bonds are loans you give to corporations or the government, and in return, you receive interest over a set period. It's generally considered a safer investment than stocks, but with lower returns. Real estate involves buying properties to earn rental income or to resell at a higher price in the future. Mutual funds and ETFs are like a basket of stocks or bonds managed by professionals, allowing you to invest in a diverse range of assets without picking each one individually. Why invest? Inflation is a key reason. It erodes the purchasing power of your money over time. Before you start investing, it's crucial to assess your risk tolerance, which is your ability to endure market fluctuations. Younger investors often have a higher risk tolerance since they have more time to recover from setbacks. By investing, you can potentially earn returns that outpace inflation, helping your money retain its value and grow. Additionally, investing can help you reach financial goals like buying a house, funding education, or building a retirement nest egg. Start small. You don't need a lot of money to begin. Even small, consistent contributions can add up over time, thanks to the power of compound interest. And always diversify your portfolio to spread risk. Don't put all your eggs in one basket. Finally, remain patient and disciplined. Investing is a long-term journey, not a get-rich-quick scheme. Keep learning and stay informed about market trends. With time and proper planning, investing can be a powerful tool for financial growth and stability.